Hey everyone, welcome back to another Inkmattic stock analysis video. Today we're going to do an in-depth analysis on Cloudflare, ticker symbol NET. I've purchased some shares when they IPO'd in 2019 and since then they are up 516%, excluding the FX impact at the time of recording this video. My goal for this video is to help you better determine if Cloudflare is still a good investment at this time. Make sure you watch the entire video as we will cover growth, valuation, debt, potential returns, future direction and potential risk. Don't forget to hit the like button, subscribe and hit that bell notification so you never miss a new video. So what is Cloudflare? Cloudflare is an American web infrastructure and website security company that provides content delivery network services, DDoS mitigation, internet security, distributed domain name server services. Cloudflare is also headquartered in San Francisco, that's in the US if you didn't know. So anytime Cloudflare pushes code on its network, it automatically affects 25 million internet properties, which is quite a lot, to be honest. Every day, thousands of new customers sign up to Cloudflare services. They serve 25 million HTTP requests per second on average. And they serve data from 200 cities in over 100 countries around the world, which is also pretty impressive. So now let's go right to the beginning. So Cloudflare IPO'd at $15 and it was originally expected to be between $12 and $14. So it was slightly higher than originally expected. And it went public on the 13th of September 2019. After the first day of trading, it closed at 20% higher, which is shown on the screenshot. Shortly after that, I did open a position of 15 shares, which we'll go into in a moment. But yeah, so if we do look at the share price itself, it has grown quite significantly late 2020 and first half of 2021. It has soared a lot. So it's gone from around $18, but yeah, it has soared significantly. And I do think this has been fueled by the pandemic and, remote working, and the reliance of the internet has played a huge part in their growth. And that's what I do personally think. They've also gone from a market cap of around 4 billion at the time of when they IPO'd to a market cap of $37.3 billion. So that is a huge amount of growth in just 1 year and 10 months. Right, so what I want to do right now is to show you how well Cloudflare has done since I've purchased my 15 shares. Like I said, it is a disclaimer that I do own some shares in Cloudflare. Only 15, but it's done incredibly well. My average price is at $17.84. My returns excluding FX impact is around 516%, which is incredible. I'm up £1,101.57. So I will let you know what I plan to do with Cloudflare later in this video. But yeah, it is done incredibly well. I am up a huge amount. If I do include the FX return, I'm still up a considerable amount. It's 506%. The FX impact has only impacted me by like £21, so it's not massive, but it does impact it slightly, because when I do sell it, it is definitely going to be converted back into Great British pounds, and that's just what my account is in. So yeah, I think overall I'm pretty happy with this investment. And yeah, I guess the only regret is, like with anything, is you wish you bought more. So this table has been taken from the Stake app. And if you're interested in signing up, you can get a free share worth up to $150 when you use code Inkmattic when you sign up. Links also in the description. So with this, we can see that revenue has been growing since Q2 2019, and it has been growing a nice amount every single quarter. But let's have a look and compare it with year on year. So let's have a look at Q2 2020. It grew by 47.9%. Q3 2020, it grew by 54.4%. Q4 2020, it grew by 50.04%. And in Q1 2021, it grew by 51.29%, which is great to see. It is continuing to grow that revenue. Don't forget, this is Webull, and if you do want to sign up, link is also in the description, and you get 2 free stocks when you do sign up to this using my link in the description. It does help support this channel. So Cloudflare is not a profitable company at this time. So if we do look at the net income, so essentially it's a net loss because it is negative. Over the last 4 quarters, they have been making a loss, and that loss is increasing every single quarter. So they go from Q2 2020 at minus 26.14 million. Q3 2020 is 26.4 million in the red. Q4, 34.02 million loss. And in Q1 2021, it's a 39.96 million loss. So yeah, they are not a profitable company, but I do believe that they are in their growth stage of their company cycle where they're looking to get as much market share as possible, similar to what Lyft and Uber did a few years ago, where they were looking to gain as much market share as possible and burning through tons of cash trying to capture those customers and get that market share. So recently, those companies have started looking at, profitability, and I do believe Cloudflare will be looking at that in a few years, but right now they are looking to get as much market share as possible while research and developing their new products. So if you do look at their R&D costs, it is on the rise as well, going from 28.13 million in Q2 2020 to 39.53 million in Q1 2021. Their largest expense is marketing and administration. Like I said, they are out to get as much market share as possible. That's where I would expect to see the majority of the cost going in, is marketing and trying to capture that market share as much as possible. So they've gone from 72.13 million in Q2 2020 to 97.7 million in Q1 2021. Now looking at the diluted earnings per share, it's gone from -9 cents in Q2 2020 to -13 cents in Q1 2021. So with Cloudflare, taking a look at their total liabilities in Q1 2020, there was at 152.18 million. And in Q2 2020, it shot up to 528.44 million, which is insane. Like, it is a huge amount of money. And this is the time when the pandemic kind of started impacting the world, basically first half of 2020. And yeah, that could have been down for some infrastructure improvement, anticipating demand as we move away from retail to fully online. And since then, yes, the total liability has been increasing, and I do believe that they are in a growth phase of their company, and they're looking to capture as much market share as possible. And the interesting thing about this is, like, when you're using Cloudflare services, you are probably going to be sticking to them, and even if you're on a free one, eventually you'll move up to a paid tier, and that's what Cloudflare's looking to do. They're also expecting that when you're using Cloudflare services, you're essentially going to be looking to pick up other services that you're going to need as your business expands, and with that you'll be looking to be paying more year on year for those additional services. So now let's look at stock valuations from analysis using 3 different platforms. So first, we're going to be looking at Hello Stake using a black tier and seeing what the analysis have given on that platform. We're also going to be looking at Webull and finding out what the recommendations are on that platform. And finally, we're going to be taking a quick look at Simply Wall Street and seeing what valuation that they have given for Cloudflare. So just remember, when it comes to analysis recommendations, it's not 100% accurate. It is just a recommendation, and that's what you should take it as. Obviously, do your own due diligence and your own research and make sure that you're comfortable and you know what you're investing in. As always, remember this video is for entertainment purposes only, and it is not financial advice. Mizuho has given Cloudflare a hold rating and a price target of $96. It was a raise from its previous target of $77, and this was updated on the 12th of July 2021, and the analysis that gave this rating was 𝐅𝐫𝐞𝐞. As you may have noticed, that the current price target is 25.55% above this price target. Argus is the next analysis rating that we're going to be looking at. It is a buy recommendation with a price target of $125. It was given on the 13th of July 2021, and the analyst is Joseph Bonner. Target price is 3.71% above its current trading price at the moment for Cloudflare. So the rating on Webull is a buy based on 19 analysts. So there's a 31.58% saying it's a strong buy, 47.37% saying it's a buy, and 21.05% saying it's a hold. Analysis price targets with a high of $135, a low of $91, and an average of $107.81. All right, so now looking at the rating from Simply Wall Street, they have indicated that a current price of $120, fair value is $104.15. It's currently 15.52% overvalued according to Simply Wall Street. So looking at the 3 platforms, you can see that there is quite a variation between price targets and recommendations. Remember, this is only for reference only, and it's not an indication of to buy, sell, etc. And it shouldn't be used as investing advice. Where is Cloudflare headed? We see Cloudflare playing a big part in optimizing the web experience for good actors, making web more reliable, responsive, and safer for users, for both users and websites, even website applications as well. We do see them playing a huge amount in the overall infrastructure of the internet and making it a safer place overall. Cloudflare CDN has a market share of 26.69% of the overall market share, which is very impressive, and they do aim to grow that. And the fact that, once you're in there, you are going to be looking to grow with Cloudflare as a website owner or an application that uses CDN services from Cloudflare. Well, we are expecting a lot of their customers to move from free services to paid, or if they're already on paid, as they increase traffic, there's going to be an increase in costs, etc. We also did see Cloudflare harness the data and track traffic around the Euro 2020 using Cloudflare Radar. And that was quite an interesting product that they've recently launched. We also do expect to see more products that tightly integrate with Cloudflare's current offerings to see improved performance security services such as intelligent routing, Cloudflare One, etc., which have already been released, and they do fit very, very nicely in their current package. And this is a list of all the services that Cloudflare does offer, which is very, very comprehensive, and it is definitely, a lot more than what they initially started off with CDN services and DDoS mitigation. Okay, so let's talk about potential risk and potential returns. So in the short term, I do think Cloudflare is going to see some sort of dip in the short term, and this may be a correction from the recent rapid growth that it's had, and it has been a rapid growth. It has been up 700% since it IPO'd in 1 year and 10 months. It has been very good as a shareholder, I have to admit. But I do think there is going to be some sort of correction, in my opinion, to correct that in the short term. But in the long term, if they keep doing what they're doing and continuing with that drive, I do think in the long term there is potential returns to be made, and that as they do move away from their growth phase in their cycle. So yeah, I do think overall it is a decent stock. And for me, what am I going to do with my stock that I currently hold? I am going to be holding onto my stock for the long term, and this is a long-term play for me. So please remember that this video is for entertainment purposes only, and anything I do say in this is purely for entertainment and is not financial advice. I hope you enjoyed this video. Let me know in the comments down below if you would like to see more of these videos, and don't forget to like, comment and subscribe. It really does help this channel get out to more people who are interested. Thanks for watching. See you in the next one.